The ultimate price action strategy. What is the ultimate price action strategy? I've traded so many different things in my time. I've traded different time frames, I've traded different instruments, I've done investing, I've done day trading, and I've done swing trading, position trading, all the different things that you can think of. And I've traded with so many different indicators through time, over about 30 years. And I can tell you one thing, the simplest way to trade is with price action. The easiest and the simplest way you're ever going to learn to trade in the stock market. Hey, I'm Rob, if you don't know me, and for those of you who do know me, hey, welcome back to all those subscribers and all those people who love watching the videos. Guys, it's Coffee with Rob. We're going to have some coffee, and then let me tell you what we're going to do. Always good to have a sip of coffee. I'm going to take you to the charts, and I'm going to show you the price action system that we use on a daily basis. But what I've learned over the years and what's taught me over the years is that the squiggly lines, the candles, the systems, the system of moving averages or MACD or different types of trading, price action, these are not going to make you the money. These are high probability trades in the market. These are the trades, or these are the ways to trade to get a high probability trade. And the other thing that the markets have taught me is that a win rate is meaningless, and that the market is a 50-50 game. Because while you think the markets are seriously objective, they're actually pretty subjective at the end of the day. Because what you don't realize is that you're not trading against squiggly lines. You're not trading against little charts. You're trading in a market full of other traders. Not 3 or 4 other traders. Millions of traders. Loads of traders with loads of money. And would you believe every single one of those traders wants to win? Interesting, isn't it? Everyone wants to win. Nobody gets into trading because they want to lose. That's insane. Just thinking about it, that is really quite insane. So here's the thing, guys. What I'm going to show you after I've shown you the charts and the price action system, and if we've gone over the usual price action system, we're going to talk about the strategy and the psychology that you need to win in the markets. Because winning in the markets is not about a squiggly line, a system. It's about a strategy. It's about applying a proper strategy. And how do you do that? How do you apply a strategy that's going to make you money? Well, it's a business plan. It's a simple business plan. You don't need a pen and paper. It's a simple 2-step business plan that you're going to need to follow with me closely. And when you follow it, you'll understand how easy it is to actually succeed in the market. But first, let's go and have a look at the charts. While you're here, don't forget, we're going to go to the charts where we have the funded account, which we're using, which we trade live, which we trade on Tuesdays and Thursdays live with everyone, and you guys get to choose the trades. If you want one of those accounts, there is a link in the description for you. And while you're there, drop down and get your free Forex book as well. It's interesting. It's just there for you. Check this out. Check these charts out. Guys, without further ado, let me show you the price action system, and then I'll show you the strategy straight after that. Let's show you a high probability system. Let's show you a system that you can use, a price action system that you can use in your trading that will help you towards that strategy that I'm going to show you after the charts. That'll make you profitable. Don't go away after the charts, because you need to know that strategy. Without that strategy, you can't become profitable. Guys, don't forget, there's risks associated with the stock market. Most traders lose money, and if you're unsure, you probably shouldn't even be trading. That's what the stock market is. So just so you know about that. Let's get on with it. Let's go and have a look at how we can determine a good price action system that will help us in our trading. And it's really easy at the end of the day. So what do? Okay, this is gold. At the moment, we are losing a little bit in the gold at the moment. What's that? $19, whatever the case. Now, when I look at this, we trade the 4-hour. And I like to trade the 4-hour because the 4-hour allows me the opportunity to pick my trades and then go away and do other things or leave trading. I don't have to sit and look at the charts all day. By the way, guys, this is the Funded Trader Markets account that's open for you guys that join me on the live shows, and we trade these trades together. You guys picked this trade. I actually did put the gold in this morning. I added it on for you guys. We're going to trade this account together. It's a bit of fun. Live shows Tuesday and Thursday. Tuesday morning 9:30 GMT plus 2. And of course, Thursdays 1430 GMT plus 2. For those guys who are interested in doing this and getting involved in this. So I'm using this for the training as well, so that you guys can get used to this platform and you can see this platform as we go. If you want to go back to the other charts anytime, just ask. We've got them as well. Now, what I normally do, always, to get my levels, I'll take it to the day chart. And in fact, if I'm looking for the whole week, I'll take it to a weekly chart. This is something I asked during the week. I said, would you guys use a weekly chart to determine where the market's going? Because if you look at a weekly chart, you can actually see that there's some nice green candles here. It's looking very positive. It's in a bullish trend for the week. So now we know that this is actually in a bullish trend for the week. But it is kind of hitting a top, but all right, it's still in a bullish trend for the week. Go back to the day. Let's use the day to give us our levels. Now, how are we going to get our levels off the day? Very easy. First thing we're going to do effectively is take it to a line chart. Line charts are much more reliable, as line charts give you that closing price, that end of the day price, not this highs and lows of the day. Because the candles, what they do is they give you these lows and these highs, and the sellers getting back in and the buyers getting back into the market. So yes, we use the candles so we can see which way the market's going to make it easy for ourselves. But when we want to draw research, it's a good idea to use a nice line chart. What we're actually looking for here is, do we have a trade? Do we have a long trade? Do we have a short trade? What kind of trade do we have? So the first thing I'm going to do is put a trend line in just to see where this is going. And clearly it's in a nice bullish trend. Clearly it's in a bullish trend. What we also have, we have here, if we go to the left, we have here a very solid resistance level, which could be a bit of a bugbear for us if we're long here, because it could get into that. And there's also a resistance level here where it is at the moment. There's a triple top as we stand at the moment, which it's struggling to get through. That could also be a bit of a bugbear for us. But as I see it at the moment, it's in a bullish structure. It's going up. You see the structure up, down, up, down, up, down, up, down, up, down. It's going up. It's just finding its way up. It's higher highs all the way up, right? So the more higher highs you get off of this, the more chance it's got of going up. So that's what we're looking for. The other thing that you will see, what you can determine, is over here we had a resistance. It broke through that resistance, came back, tested it, and carried on to the long side. So that's a very good signal that it's now going bullish and going long. So we take a long trade on this by using simple trend lines, trend resistance, trend support, trend resistance, and a normal resistance level at the top here on the day chart. And if you take this back down to the 4-hour chart, now we go back down to the 4-hour chart and we see what we've got on the 4-hour chart. And on the 4-hour chart, what I'll do is I'll take this and say, well, that looks pretty bullish along here. Look at the structure going up, going up, going up. I mean, you know the structure looks like this. Up, down, up, down, up, down, up. The next leg should look like that. If it doesn't, you have a stop loss in place. If it does, you're going to gain all of that all the way up to the 2750, which is what our target is, 2750. Because if you look at it, look at that. That's your run. That's the run you're looking for. It's going to go down, all the way up and down like that when it's going up. When it goes against you, you can draw another line in here, which I shouldn't because there's too many lines. But you can draw another line here. And if it breaks through this line, then that's the end of your trade. Then your trade is over. Your trade has ended. It is no more. Hopefully that makes sense to you guys. That's a simple way of trading price action. Of course, price action is very often about highs and lows, resistance and support in straight lines as well. So if we go to the US 500, you can actually see, let me just take that out the way on the left there. You can actually see that we've drawn in a resistance here, we've drawn in a mid support here, and we've drawn in a main support here, all taken from the daily levels, by the way. We've got this bounce up, break through that main, what was resistance is now support level. The reason it's a support is it's hit there so many times, and every time it gets there, it's like a magnet. It means there's money lying there, guys. You know, here, resistance, every time it gets here, it comes down. Why? Because there's money lying here. So now what we're looking at is a scenario whereby this is a resistance that we're looking at. This is a sort of trend that I've just drawn in here quickly to see that if it breaks down to the downside, then I know it's breaking away and breaking off the trend as we speak. Okay, but there's your support, there's your resistance. It's going up, it's up. See, same sort of structure as the goals, going up, come down, go up, come down, go up, come down, go up. So your next level is up here in the resistance in the 6,000s levels. Will it break through here? We don't know. We shall have to see. But that's how you draw your technicals in. That's how you get your high probability trade from the markets. You're looking for a high probability trade. You're not looking for, this is not going to win you money. This is just going to tell you which way to get into the trade. Once you're in the trade, now you come back, you listen to what I got to say next, and that's how you manage the trade to make the money off this trade. It's about making money off this trade, not making a win rate off this trade. Now you know how to work the system. Now you know what a high probability trade will get you. But a high probability trade will not win you money. A high probability trade might win you 7 or 8 trades in a row, might win you 7 or 8 trades out of 10. That's high probability because you've looked at what's happened in the past, you're looking to make a profit in the future, and you're looking at the most high probable trade, high probability of making money in the future. So you're looking at a trade that's going to do the same in the future. So that's what you use the charts for. You use the charts to give you that insight as to what might happen next, and then you take that trade. But within that trade, you've got a profit target, you've got a stop loss, hopefully, because that's the strategy. And if you just don't have that, let's just say you're just like, oh, mishmash, I'll just take trades as we go. I've got a high probability trade. I'm looking for a win rate. I'll just take trades as we go. And you take trade here and a trade there, and you make $50 there and $100 there and $10 there, and you just take trades, okay? And then you've got this win rate and you think you're winning in the market, and then you get that one trade that goes against you, because anyone who trades like this will do this, by the way. Don't tell me you won't. You're going to take that trade that's going to go down and it's going to go against you. And then you're going to dollar cost average that trade, most likely, because everyone seems to learn to do that. And then you're going to find it's getting worse. And then if you did have a stop loss, you'll have moved it away because you don't want to get out of the trade, because you're so confident in this trade that it's going to go back your way that you believe that you'll just stay in the trade. So you'll just move the stop loss away a bit further. You can handle a few $100 more, so you'll put it a bit further away, and you'll just keep on going. Eventually you'll get to a point where you don't want to be in that trade anymore, where you can't keep holding on to that trade because it's so far in a loss, and then you'll take the loss, the big loss, the gargantuan loss. Of course, the minute you do that, the trade will go the way you wanted it to anyway, and you'll feel even worse. But here's the thing. You've got a win rate of 80%, but you've got a $10,000 loss and a $500 win on those 8 trades. So win rate is meaningless. You see, I hope you guys are getting this. It's not about win rates. So the strategy is about approaching it with risk management properly, doing it right. How do we do that? The best way to do that, guys, is to take your account. Let's say it's a $100,000 account. We're going to use that as a round figure. I know some of you have got $5,000 accounts. Our funded account is a $25,000 account. There's other accounts that are $1 million and $2 million and so on. Okay, we're using $100,000 as an example, right? Then you risk 1% on every single trade of that account. So 1% on every single trade of that account is $1,000. It doesn't have to be 1%. It can be 2%. It can be 5%. It's up to you. Totally up to you. The trick is to keep the loss the same on every single trade. Now, how do we go about that? How do we do that? What we do when we approach the trade, the first thing you do when you look at the trade is say, where would my stop loss be? Where, if I look at this trade and I saw the price, where would the price be? Completely invalid. In other words, I wouldn't touch this trade with your money. It's terrible. That's the point you're looking for. Then you find that point and you say, well, that's a good place to put my stop loss. I'm going to put my stop loss there. Now you found the spot you want to put your stop loss in. Now you work out how much is $1,000 back to the cost. How many contracts can I buy? How many puts can I buy? How many points can I buy? How many shares can I buy to make up that $1,000? Now you know the size of your trade. You see where I'm going with this? You see how I'm working it back? Now I know the size of my trade. Next thing I want to know is, where would my profit level be within reason? A profit level that I would be able to achieve. And does that give me more profit than I have as a loss? Because I'm I'm looking at $1,000 loss here if it goes wrong. I at least want to be looking at a $1,500, $2,000 win. I want to be making more on my wins and losing less on my losses, but I don't want to be putting my targets so far out that they're unachievable. I want my target to be achievable. So you've got to have an achievable target and a good stop loss. So good risk to reward. That's as simple as your business plan gets. Then all you've got to do is when the price goes into a good profit and it's making you some money, well into profit, let's say you got $1,000 stop loss and your trade goes $500, $600 into profit. Instead of cashing out, which you're not supposed to do, and like I say, take a brick and whack your hand to stop yourself from doing that, or sit on your hands or something, don't take the profit there, wait for the target. When it gets to $500, $600, take your stop loss, move it up to break even or even slightly in profit, makes you feel better, and leave it there until it goes over $1,000. And then move it $500 into profit, and so on, and keep on following it all the way up till your take profit level. At take profit level, guess what? Don't take profit. Put your stop loss right up behind it. If it carries on going north in profit for you, then you make more. If it comes back and takes out said stop loss, you basically made target. That's a decent trade. That's as simple as the strategy gets. And if you follow that stringently, then you'll understand that you're not trading objectively. You're not trading against squiggly lines. You're not trading for win rates. That course you went on and gave you all the abbreviations about the stock market and all this and that and the other, and you think you're a genius in the stock market now. When you bring it all back to basics and you learn, you're basically investing in a market where there's a whole bunch of other people investing in a market. If you bring it back to basics and everybody's doing the same thing, then eventually you understand that it's subjective and you're going to make a profit based on a strategy, not an objectivity of maths. You know, if there was a bot or an AI that did this mathematically, that actually worked, that actually won every single trade, there wouldn't be a trader in the market that wouldn't be using it. They wouldn't be out there saying, I want that, because that just makes so much money. Yet when you look around you, and you see all the other traders around you, whether they're on YouTube or whether they're in a place that you know of or in these institutions or pro traders or whatever. Funny thing is, they're all still trading manually like we are. They're all still watching their trades, not using bots, not using AI. Gee, I wonder why. Ever thought of that? Well, that's because that makes money. Money's made with strategy. Any pro trader will tell you that. Any pro trader in the market will tell you that it's all done with strategy. And it's all done with the strategy that they use. Everyone uses a different strategy. Pros don't use stop loss, for example, because their trades are too big. I've told you this before. How can a pro use a stop loss? Their trades are just gargantuan. They're massive. So they can't be playing around with specific points in the market. They will have one mapped out. You know, if the trade gets to that level, we're going to have to start searching our way out of the trade, and it'll be a group decision, and they trade much slower than you do. They don't trade instantly. They're not trading with small amounts of money, and they are looking for liquidity in the market because they need it to fill those sizes of trades. Just understand that. That's how it works. But guys, if you want to know more about strategy, you want to know more about price action, go back and have a look at my other videos here. The last one specifically talks about price action the same way we did now, so we can go over and over and over this again until you get it right, because it's the strategy that you need to get right, not the high probability trade. Thanks for watching, guys. Don't forget to sub. See you next time. Cheers, ciao, and bye.